You ever look at a stock chart and just wonder, what if? Well, today we're going to do something really cool. We're going to see how AI can take a single flat picture like this one and turn it into a living, breathing simulation. It's all about taking one moment from the past to explore 1,000 different futures.
I mean, think about it. A daily stock chart, this one's for IBM, it's basically the final chapter of a story, right? It tells you the open, the close, the whole journey in between. It's useful for sure, but it's always looking in the rearview mirror. It's just the one way that day actually played out.
But here's where it gets interesting. What if that picture wasn't the end of the story? What if it was the beginning? What if you could pull out the data hidden in that image and use it to spin up, I don't know, hundreds of totally different, totally plausible stories of how that day could have gone?
And that, my friends, is exactly what this simulator does. The whole process kicks off by looking at this chart not just as a picture, but more like a digital blueprint. And the AI's first task, it's got to act like an architect and pull out all the key measurements from that blueprint to build a working model of the day.
Okay, so how does it actually start? Well, the AI literally scans the image and starts yanking out the most important data points, the numbers that really define that trading day. You can think of them as anchors, right? The hard facts that keep our simulation grounded in reality. So let's take a look at what it found.
First up, it grabs the opening price, $254.67. Check.
Next, the high for the day, $255.65. Got it.
The low point hits at $251.04.
And to wrap it up, the closing price, $253.47. Boom. Those four numbers right there, that's the absolute heart of our digital blueprint.
But hold on, it's not just those four numbers. It's way more detailed than that. The AI actually pulls a total of 14 different data points from that one image. We're talking everything from the last day's close all the way to market cap and dividend yield. It's this super rich data set that really gives the final model its muscle.
All right, so we've got our blueprint, we've got all the measurements. Now for the fun part. We need an engine to actually bring this thing to life. And this is where we get into some of the really serious financial modeling.
The engine's power source? It's something called geometric Brownian motion, or just GBM for short. Now that sounds complicated, but here's the simple version. It's basically a math formula that mimics the random, unpredictable path of a stock. It has rules for drift, which is kind of the stock's general direction, and volatility, which is all the random up and down noise. So for our blueprint, GBM is like the laws of physics. It sets the rules for how our simulation can move and behave.
But here's the thing. Running the simulation just once, well, that doesn't really tell you much. To really get the full picture, to see all the possibilities, we use what's called a Monte Carlo simulation. Basically, you take that blueprint, you take its laws of physics, and you just run the day over and over and over again. It's how you map out the entire universe of what could have happened, not just the one thing that did.
And we're not talking about running it, a dozen times. The documentation for this thing says it runs the simulation for that one single day 500 times. Every single one of those 500 runs generates a completely unique, totally believable path for the stock. This is what lets us actually see what's called the cone of probability and get a real gut feel for just how uncertain that day was.
And this is where the real magic happens. Now that we have the engine all set up, we can start playing with the controls. We can start asking those what-if questions. What if the market was crazy that day? What if it was super calm? We can create entire alternate realities for that single day of trading. So the simulator has 5 main scenarios ready to go. You've got your baseline, which is just recreating the day exactly as it happened. Then you can crank things up with high volatility. Think of a chaotic day with an earnings announcement. Or you can dial it way down with low volatility for a sleepy market day. And of course, you can simulate days where the stock is just trending hard, either down with a bearish drift or up with bullish momentum.
Let's make this real for a second. Let's compare the two extremes. For a low volatility day, the simulator literally just cuts the volatility number in half. And what happens? You get a much tighter, calmer range of possible prices. But for a high volatility day, it doubles that same number. The result? A way wider, way more chaotic spread of outcomes. It's amazing, right? You change one little dial in the physics of the blueprint and you get a completely different story.
Okay, so this is all really cool from a tech perspective, but so what? What's the real-world point? Why does building a tool like this from a simple picture actually matter?
Well, who actually benefits from this? I mean, if you're a quant researcher, you could use this to test your complex models against a real historical event. If you're a student in finance, wow, this is an incredible sandbox to just play around in and really understand how markets work. And if you're an algo trader, this is a dream for stress testing your strategies against hundreds of different what-if scenarios.
At the end of the day, its real power is just how versatile it is. It takes something abstract like probability and makes it something you can actually see and mess with. It flips historical data on its head, turning it into a lab for testing things for the future. And it's a super fast way to prototype new ideas for trading algorithms. And remember, all of this from a single JPEG. Now, we have to be super clear about something. It's really important to know what this thing is and what it's not. The original source is very careful to point this out. This is a tool for learning and for research. It's a simulator. It's for prototyping, for teaching, for validating ideas. It is not a crystal ball. It is definitely not financial advice. It's about exploring what's possible, not predicting what will happen.
And that really leaves us with a pretty big idea to chew on. Think about it. We started this journey with one flat picture of one stock on one particular day, and we watched an AI unpack it into 1,000 possible futures. It really makes you wonder, doesn't it? If we can do all this with a simple stock chart, what other static images are just sitting out there, packed with hidden potential, just waiting for the right engine to bring them to life? What else are we going to be able to simulate next?